We are Entras. Together, we build software for controlling flexible assets for the industry.
We strongly believe that the future will be flexible. Any industry, big or small, any building, any home will make use and make profit out of flexibility.
That future starts now. In this podcast series, Flexing the Future, we share our insights on flexibility.
Welcome to our podcast, Flexing the Future. Today, we will be talking about the uncomfortable truth about industrial flexibility. Why is flex not yet scaling? And what are we, Entras, all getting wrong in this? The guests today are Jeroen. Welcome, Jeroen.
Thank you.
Jeroen will look from a lens of markets and productization. We also have Jens. Hello, Jens.
Hi.
Welcome. Jens will also, look from the lens of the product and analytics, optimization analytics. And I will look from the lens of the client. So, as a short introduction, flexibility is everywhere in the energy transition narrative, but much harder to find at scale in industry. So why is this happening? Today, instead of explaining what flexibility is, we're asking why it isn't working the way many of us expected. In this internal Entras episode, we'll challenge our own beliefs about markets, models, and industrial reality, and ask what we might be getting wrong. So I'll start with dropping a question in the group. We often hear that the market will reward flexibility. When you look at real projects and real models today, do you actually see that happening?
Let me take the first one.
Yeah.
I think the market does reward flexibility. If you look at the day-ahead market, for example, which is a bit of the cornerstone of the electricity markets, you see lots of volatility. Volatility meaning high prices, low prices during a single day, during a certain week. So the market does reward flexibility, meaning if you shift your consumption or production towards those hours, you get additional value. So the value is there. But maybe the value is a bit skimmed by policies. I think fossil fuel is still less taxed than electricity in Europe, which favors still use of fossil energy instead of electricity. Another thing is maybe also capacity tariffs. If you consume a lot of energy and you want to do so because the market is really low priced, lots of renewables, you pull a big peak from the grid and then you're penalized for it. You pay a lot of grid fees for that. So it's not really incentivizing to do so. So that might be a few.
Yeah, that's true. And especially the costs of the grid are really hindering capturing the full value and helping the market to find the balance. On the other hand, the savings are there even under these conditions. But yeah, it's a bit more difficult to find than the right conditions at the customer. But typically in industrial customer, often the conditions are there. And we see at our customers that they achieve 10 to 20% savings when we optimize on flexibility. We consistently see savings of 50,000 euros per megawatt annually that can be steered flexibly. So the savings are there, but yeah, there is a lot of some of it is masked in a way by these incentives or even hindered. But even then, I believe today certainly there is more than enough flexibility demanded by the market.
Well, I would say it doesn't reward flexibility, or maybe not enough. But because if it would, we would see much more companies really wanting to do something with it.
Yeah, but it depends what you say rewarding. I think if you look at indeed the value of flexibility, as you mentioned, 50,000 euros per flexible megawatts, it's not just a few pennies. It then all depends on what's this compared to the total costs of a company, of a good produced, probably.
Yeah, and of course there's a lot of attention today, and partly rightfully so, which goes to batteries, because these are, I would say, a pure asset that only is there just to capture the volatility in the markets and to reward flexibility. But there is a lot of attention to that. while actually it is a capex intensive solution, and often existing assets in industry, there are existing cogeneration, existing heat pumps or e-boilers are not that widespread yet, but they're coming online also. These are elements which capex is already there as a sunk cost, and then it is actually often more interesting to just valorize the current assets value of flexibility than to additionally invest in new capex.
That's what we could do, but suppose on the stock market would be some share and people would think, this will really bring me profitability. They would immediately start buying it and the price would go up immediately. Here we're saying the market will reward flexibility, but the market is not moving. So normally a cost driver would inspire immediate action. That's what the economic theory says.
Yes.
Why is it not the case then?
I guess part of the podcast is about what are the hurdles. So there are quite some hurdles.
Don't say everything yet.
No, but there are quite some hurdles. Yeah. But in generally, I think there are two categories. One is contractually costs, so very tangible stuff that pose hurdles, and they are there. But I think there is today still a very big one, which is more related to the people, which is understanding behavior, accepting, which also somehow I don't think it will. It just takes time. People need the time to understand the new context, and it goes. That is the element that goes much slower than I was expecting.
We were talking about the market. So would another market design be able to change that?
To me, actually, the current markets are quite good. Certainly, the day-ahead market is it's an efficient commodity market. It is efficiently sending signals to coordinate supply and demand, because that is the essence of the market. And there have been enough studies by now that it's the best way to organize it, and it is very well implemented in Europe. And that is specifically the day-ahead market. And of course, also on the fast flex side, so everything which is after day-ahead, there are a lot of products also. It is a bit more opaque because there's very different layers and types of products and type of mechanisms. But also that is it is proven that it works. So to me, that should not be the problem.
I go to the next question then, because we're talking about fast flex. So in many discussions, we focus on fast flex, ancillary services, and so on. Some argue, though, that slower flexibility in day-ahead planning actually delivers more value. So are we focusing on the wrong part of the flexibility spectrum? How should we deal with this?
Well, it is normal that there is too much focus today on this fast flexibility, because in the future, that's my personal, and I'm not the only one, most experts are convinced that slower flex, so the day-ahead based flexibility, is actually doing the heavy lifting of coordinating supply and demand. But on the other hand, it is quite normal that people, when the word flexibility is mentioned, that they think about fast flex, because 10 years ago, that was the only market or market mechanism that was rewarding flexibility. Because 10 years ago, there was no volatility or almost no volatility on the day-ahead market. And therefore, of course, the first project, and that was the era when the aggregators came into existence, they helped companies capture the value of fast flexibility. And there was the only flexibility that the market at that time was willing to reward. But that is shifting. I think that is one of the elements that takes some time. And then in our niche, I think it's beneficial to our segment of industrial flexibility, because there is a lot of value in slow flexibility, day-ahead-based flexibility. But the good thing about it is it matches much more the reality of a factory, because day-ahead or slow flexibility is basically a schedule for the next day. And a lot of people are hindered by the thought, if I go into flexibility, I will be in real time be disturbed by price signals. And to some extent, in fast flexibility, there is a risk of that. While in slow flexibility, it is basically scheduling. We have another podcast about supply chain and planning. Well, basically, the day-ahead optimization for a factory is much slower. And the good thing about that is that certainly much more is possible. You can go much deeper in the flexibility. So I think there is an opportunity, and this is why we should raise more attention to slow flexibility, certainly for industry.
Mm-hmm. Well, I think both will still be valuable in the future. So the slow flex, it's mainly driven by renewables. It's wind and sun. It's large amount of energy which is being produced during those moments, and you need to consume it, preferably. But the fast flex is also valuable because that's used to keep the grid in balance. So if there is a little bit more sun, a little bit less wind or something, you still need the fast flex. So, and I think industry can do both. So indeed, the fast flex is something you have been doing for quite some years, and that was, well, let's say, quite easy, maybe. So on specific assets, let's say a CHP or an e-boiler, they could deliver fast flex. It's one single asset, and they just have like a steering signal coming from the aggregator, in fact, coming from the TSO. But now with slow flex, it will become a bit more complex from the product side, at least, because you need indeed the planning, you need to optimize planning, you need to make forecasts, you need to make schedules.
Yeah, which makes it expensive to do. So it should be worthwhile. And in the other podcast with the supply chain management and energy management, that was a bit the conclusion. You need companies with a big energy cost and the ability to be flexible, of course, before it's worth the effort. And that's for slow flex, I think, an important one. If the power that you're using in your processes is not high enough, then to set up a system to impact slow flex seems a bit of a very expensive, complex system for peanuts, in fact. And in that case, if they have a machine that can take fast flex, for instance, very typically the greenhouse growers, they have those CHPs, and it's easy to play on fast flex. They don't need to take into account too much slow flex stuff because they have a very flexible process, and you see them all going too fast. If we would say we focus on slow, do that first, with a certain kind of companies, you would not be able to do business because they require fast. They just demand it because they see and understand that's for them the easier thing to do. I think we have different segments within the customers.
Yeah, I partly agree, but also partly disagree. I think the slow flex is a bit maybe more complex on the product side because you need all the forecasting and stuff, but that does not necessarily mean that it needs to be complex for the customer, for the industrial party, for the industrial side. You do have solutions which make it easy implementable. So you can valorize in an easy way the slow flex, even if behind the scenes it's a very complex thing.
Yeah, and maybe also because we say it's complex, it's expensive. I do not agree. I agree that, okay, if it's for a few thousands of euros per year saving, then we have to go to, I would say, very standard solutions. But we are in industry. In industry, not even the very, very big industry, just medium-sized companies that have a bit of heat and a bit of process going on, they are quickly at €1 million annually. So it quickly makes sense. And then also, what is complex? Because slow flex flexibility is, if you look at it from the lens of operating a factory, it's not really complex. Operating a factory on the day-to-day basis, the complexity of that is of the same order of magnitude as optimizing slow flex. So that should not be, I think, a hurdle. Actually, if you compare slow and fast flex, on slow flex, of course, the complexity is on the process side. While on fast flex, the complexity is much more on the market side. And I also believe that this is why we will come to the fact that to capture slow flex, that will be done by experts in processes. While fast flex, okay, you give a flexible fast megawatt, you give it to the market and like an aggregator or this type of players, and they can do their thing on the market side. I think that is important, but and both go hand in hand also, because fast flex should stand on the shoulders of slow flex. A lot of problems in industry with fast flex come from the fact they are not embedded in a slow flex optimization. And that is why they are disturbing the process. So we have enough examples by now with customers who do first slow and then fast flex with our industry software, where basically the fact that you first forecast and optimize planning, schedule, slow flex, then you can, without disruption, activate certain pockets of fast flex. It's just a matter of, I would say, maturing the value chain, maturing the solutions. But I think it's important to understand that on slow flex, the complexity on the process side, but that complexity is not bigger than what plant operators or factory managers are used to. It is the same order of magnitude. And the fast flexibility is on the side of the market, something which traders are completely confident and is not more complex than what trading companies are currently doing. So I don't agree it's too complex. Of course, the solution, the products like our solution has to deal with the complexity that the operator is just run. It has to run automatically.
Yeah, we should make it simple.
We should make it simple.
That's the point,
to
I
operate.
think.
Yeah. Because if you cannot do that, then of course, then it stops. So this is why I wanted to mitigate a bit. I don't want to give the impression that if you want to do slow flex, you're doing complex stuff on a daily basis. No, not at all. It's fully automatic.
Yeah.
It's complex, but it's automatic.
Yeah, I don't see it. Yeah, but my car is also complex. I don't notice it. I just
yeah. To build further on this one. So in most industrial setups, who actually bears the operational pain of flexibility and who captures the upside? And if those two are not the same party, why are we surprised that adoption might be slow?
Yeah, well, again, the two aspects. So the first one is contractually. If the allocation of risks and rewards in contracts is such that the person who can activate, or the entity that steers, that reacts on price signals, but the benefits, the euros, go into the pocket of somebody else. So imagine you have a fixed price contract and you optimize, your supplier has all the benefits and you do the work. So that doesn't work. So first of all, you need contractually alignment of incentives, but I think naturally today the market is evolving towards that. That is one thing, but the second thing is within companies. Because if you touch upon flex, you touch upon different disciplines. You touch upon the energy manager who is looking at energy, but you also touch upon the operational people who are managing the process and the operational day-to-day operations. Then you've got a CFO somewhere, or people are more looking at from a high-level perspective. And of course, if I would say the benefits go to the incentive is interesting for the energy manager to do good things, but the plant manager, the operations guys, they are only having the additional complexity, then it doesn't work neither. So I would say you need also the different disciplines together, that they can work together and they have the same goal. And that is something in some companies is missing.
Yeah, which is for us difficult to accomplish. We are normally speaking to only one of those parties. Normally, I guess we often speak to the energy managers.
Yeah.
But they have then, we can talk about a lot, but then they have to go inside their organization, explain all that to the operational people.
And they are often reluctant on implementing flexible stuff because it messes with their operations. And,
yes.
Let us just have a look at our current customers. So which customers are currently with our software optimizing that process? I think they apparently don't have all these problems because they decided to do so. I think there are two categories. You have, on the one hand, you have the companies who are very, I would say top down, but I would say everybody in the company is aware of energy. There is a wide stakeholder awareness within the company, and everybody wants to achieve this. They know that if we do this, it's better for the company, we're future-proof, and so on. That is one type of customers we have. The other type of customers we have is where you have more an individual, I would say a visionary or an expert who is convincing everybody else around him that this is the right thing to do. But today you need or that everybody agrees, or you need one person who really takes the lead and takes the leadership of making it happen. we don't have any customers yet where it is just, okay, energy is just one of the many problems. And yeah, of course, if we can save 300,000 euros, of course, we will always do it. But if there is no focus from the top, or if there is no focus from an individual, today it is not happening. And I think that 80% of the companies are those companies, and those are not doing it. So the other 20%...
That's probably because they're not aware. I mean, they know energy, it costs money, they have their contracts with their suppliers, but they maybe have no clue that they can save X amount of euros by being flexible.
Yeah, we started this podcast with a check of the market, with the question, does the market reward flexibility? So, but now then we're kind of saying that people don't know that the market rewards flexibility.
Or not everybody knows, maybe, yeah.
Yeah,
well, or I think it has a lot of been talking. But maybe that's me. But I find it hard to believe that people still today think there is no value in flexibility. Actually, I think most people know that. But on the other hand, you've got other stories. Like, for instance, you've got this boom in batteries. And then people say, yeah, but once the batteries are there, all flexibility will be gone. Which is not true. Certainly not for slow flex. Because even the big, the most optimistic plans in batteries, in the next 10, 15 years, they will not absorb the imbalance between supply and demand. On fast flex, I think there we are a more mixed picture. But I think people say, yeah, it's probably true, but okay, negative prices, so solar, I won't do it, and batteries, and I just wait. I think that is more the problem today.
Yeah, maybe, and indeed, linking to that, also just industrial parties who know about flexibility and maybe know that there is some value, but don't really believe that their process, their industrial site, it's fit for being flexible. That's, I think, also one of the things that we sometimes hear, and I think I can agree with that. Not every process in industry is flexible, but I think there are some conservative views maybe on flexibility, and that might also be linked to how flexibility was perceived, I don't know, 10 years ago, with indeed interruptions and shutting down plants because of the TSO calling you. But I think now with the slow flex, with the planning, that's a different type of flexibility.
And I think also there's some kind of a mix-up between what I could do now and electrification. Maybe they think we can only do a lot with flexibility when we electrify, not realizing maybe we can start already, and if we then would electrify, it will grow.
Yeah. So in general, you've got two types of assets that you can steer to valorize flexibility. There are the assets that are there today already, like a cogeneration unit. A lot of industrial people, companies have that. And then, of course, the assets that are planned to come, like heat pumps, e-boilers, maybe some kind of storage. And of course, we can, of course, wait until everything is electrified, because electrification without flexibility just doesn't stack up. So the business case is not there. So once these e-boilers and all of those will be there, I think there will be just a need for a steering. But because of that, everybody seems to be waiting for that. While every time almost when we look at existing assets, almost always we find 50 to 100,000 euros per megawatt flexibility in the existing process.
Yeah, and it can be as easy indeed, as you mentioned, cogeneration or CHPs, just running base loads, even when the electricity prices are negative and fossil fuel prices are quite high, they just keep on running, typically maybe because it's heat driven, but in practice we do see that they could be made flexible, and there is still value to be found indeed with existing assets today.
But of course, it can become complex. Let's take the example of CHPs. If they have certificates, then quickly, and often I think we sometimes think, a lot of certificates, probably not worthwhile. And sometimes it's not. But most of the time it still is.
But then you come back to, does the market reward flexibility? Yes, the market rewards it, but it's policy, it's regulation that hampers or that blocks the market signals.
But that's maybe also market, but another kind of market,
Yes.
Okay. Okay, I go to the next question, which builds further on this one. Is the flexibility sector suffering from a lack of standardized products, or is flexibility inherently non-standard? And are we forcing it into product boxes that might not fit reality?
Well, two aspects. The first aspect is the maturity of the value chain. that is still ongoing. So the roles, who does what is the role of an optimizer, what is the role of a virtual power plant, what can an aggregator do, what can a supplier do, all of these roles, it is still maturing. So I think we are slowly seeing clear, experts start to see it clear. So that, of course, as long as there is no maturity in the value chain, it's difficult to see clear, also for customers. Who does what? It's not very clear. Secondly is the products itself. But there it depends on the segments. Of course, if you want to steer the charging of electric cars, it has to be a very, very standardized approach to do that, because it has to go to the mass. But on the other end of the spectrum, it's where we are in industry. Yeah, there it is, of course, if you go with a standard product, then it fights probably with the process, or it is just not reassuring, and rightfully so. The operators say, well, with such a standard product, that is just hocus pocus for my process. I will not allow that. So I think that is true, but it depends on where you are in the market. If we have to go for then lower cost, easy to set up products versus more bespoke, more tailor-made solutions for the more complex applications. But typically the more complex applications, they have much more megawatts to reward also.
But let me compare it with the fast flex, where an aggregator can come and say, I will install this box and you don't have to look at everything else, it will work. So that's maybe setting a kind of expectation for companies that if they want to do other stuff like slow flex and optimizing on the dynamic prices, that they expect the same kind of solution.
Maybe, but I think it's just a bit the strength of the markets, the wholesale markets, the slow flex, is that it's just price signals and you can do whatever you want with it. And I think it's just the strength of that. Because indeed, if you mention the fast flex, all the ancillary services, the reserve products, it's very standardized. It's really strict in how you should react and stuff.
Which
but
makes
it's not
it
always fit. Yeah, it makes it easy, but it's not always fit for the industrial process. I think it's also a strength that you just have price signals and you can react however you want. And then there is a product to be made so that it fits, so that you can make or take advantage of the prices, but it fits your process, it fits your machines, it fits your production plant.
Is the reason we say for the segment where we are in industrial flexibility, we say process comes first. And that is the good thing about wholesale markets, which are purely price driven. There is something like opportunity cost. If a customer says, well, sorry, first I will bake my cookies, then that is perfectly fine. And then you forgo a little bit of money on the flexibility side. But that is a very legitimate and good. But the problem is, of course, you go with solutions and products towards these people where you say, we sign a contract and we will reward flexibility. Whatever it takes, we've signed the contract, then something is wrong. Maybe a bit of a bad analogy, but you have now, in the traffic, you have now third-party companies that doing the speed control. And then they put in the contract, well, you cannot take any measures to lower the speed because then our business model doesn't work. And that is a bit the same risk. So I think it has to be just a clear split. The incentives has to be on the right side. And I believe then a lot of hurdles will be gone. But yeah, we have to explain it better. Process comes first. Otherwise, in industry, you don't have a license to operate.
And that's typically different than the aggregator business model, because there it's typically profit share, revenue share. And then, of course, the aggregator has the incentive to activate as much as possible, but that's not always fit for the process. So indeed, again, I think it's a tailor-made thing maybe on the slow flex, but I think it's an advantage compared to
maybe
fast flex products.
Another comparison, we're not really into the, let's say, residential real-time steering, but you see something comparable. So let's say that every house might probably benefit from an optimization with solar panels, consumers, maybe an electric car, this kind of stuff. And then I don't know about you guys, but I don't hear too many people saying they optimize everything. And if I hear people saying, like you, Jens, that they optimize stuff, I have the impression they're an engineer who really likes to build something. So again, this doesn't point to the fact that the point I want to make is there seems to be no standard product in that market, or maybe a very limited one, and then you should go to more, let's say, tailor-made. But then you see most of the people will not adopt it because it is too complex.
Yeah, but I think if you look at the household level, there are only a few assets, in fact, which make sense to steer flexibly.
Yeah.
It's, I think, an EV, heat pump, maybe electric boiler. I think those are like the main consumers in your house, and combined with the battery and the PV panels. Yeah. But I do think that today there are standard products. If you have PV plus a battery, you buy a battery. It comes with a steering algorithm. You do have like vertically integrated products, I think, for households, and I think it makes sense because your PV plus battery installations plus EV, it's similar to mine. It's similar to your neighbors.
But if we compare this then to the industrial case, is it comparable or not?
There it's different because every industrial site is different. I mean, they might be built with similar components, a heat pump, a CHP, but the process behind it, it's always different. It's very heterogeneous, and that's, I think, a main difference with the household level thing, where it's more homogeneous in types of products and how they're combined.
Yeah, I think there are two elements to look at, and that is still also not fully mature, and it applies to households and to industry. The first one is behind the meter. It is not full. So behind the meter, just for those who are maybe not don't know the term, it means that if you have a grid connection, you pay grid costs on the level of the grid connection, and everything you do behind that meter is a behind the meter problem. A front of meter, if you put a battery directly to the grid, not connecting to anything else, it's a front of meter problem. And why are they fundamentally different? Is the fundamental difference is in behind the meter, because the grid cost is calculated, charged, invoiced by the grid, indirectly with the supplier. It is invoiced based on the net position, what is happening behind the meter. But if you steer flexibility and you have more than one asset, then you have a multi-asset behind the meter problem. And that is the current solutions, which I see today in the market, which is not fully mature, it's an optimizer for a battery, or is curtailment for PV, or a logic to charge a car. So it's always one asset that is steered. But the problem is, if you have 3 of those optimizers behind your meter, then they will fight with each other. So if the market pursues like this, you will have disappointed customers because they will fight with each other. The battery wants the energy from the solar panel, but the solar optimizer says, prices are negative, I will shut it off. So you have non-optimized results. So the first one is you need behind the meter, and most applications are behind the meter problems. And the only thing which is front of meter is the big scale utility. So the power plants and the big large scale batteries. This is front of meter. Everything else is behind the meter. And so the consequence of that is that you need a master optimizer. You cannot have several optimizers acting independent from each other behind the meter. You need a master optimizer, and the others have to become a slave optimizer. Otherwise, it just doesn't work. And that is something that is, and the market is looking for that. Certainly in the residential world, there are a lot of startups and existing companies and new products to solve that problem, but we're not there yet. On our side, on the industry, we know it is behind the meter, and we know it has to be done. And that is also, of course, most of the fast flex product, they are conceived as a spirit of front of meter. They have never been conceived and deployed as a behind the meter multi-asset master optimizer problem. And I think that is something which we are fighting also in the perception. I think that the market is not yet, experts are aware, but the market is not enough aware that behind the meter you need a different kind of product. And there I think the market is relatively immature, and that is also a bit hindering. But I said 2 elements. The second element, which is a problem, is the data. And it's households, commercial buildings, industry. You need some physical data. And in an ideal world, we would have some kind of a standardized protocol. Everybody uses the same. And then like the electricity is like 230 volts at your home, 50 hertz, and you just can plug in any appliance. But with data, it's not yet there. You've got different databases, different protocols, different interfaces, and that's also currently a problem.
Yeah, and then even if you go one step back, you need to have the data. Now you mentioned it's different formats and it's complex and you need to combine it. But first you need to have the data. And I think in Flanders we have all the digital meter by now, or most of us do. But I think there are other countries in Europe that still don't have digital meters. So indeed, if you want to optimize behind the meter and you need the meter data, it's just not there. All
right,
it's true.
So maybe some conclusion now is, I want to go on what you said, Jeroen. These kind of systems need to evolve towards something that we might not know today. We maybe see already signs what it will be, but it's clearly not generally accepted. There's no protocol or standards that are used by everybody. And the same goes for the optimizers. You have a lot of technologies, let me call it that way, that are trying to find their place in this flexibility world.
Yeah, that's true, but I think what you see here is, the good side of capitalism at work. People are just trying. There's also dark side, I guess. But the good side is that at least there is innovation, there is value. So back to the first point, there is value in flexibility. So people, entrepreneurs or developers of new business, they're looking at this. How can we capture it? And and of course, what will be the winning model? That is something, the winning model 10 years ago was the aggregator model. Okay. But I'm afraid that era is a bit over and we have to move on now to next level flexibility, and which is to put it in a bit general terms, it will be slow flex based, and on the shoulders of slow flex there can be some pockets of fast flex. That is, I would say, how I look at it. But the market is looking for that. I think we are in a segment with Entras, which is industry, which is on one hand is difficult because it's difficult to standardize. It is. Every site is different. On the other hand, the savings are also so significant. And on the other hand, you've got a counterparty like plant operators who are actually doing a lot of complex things. They can handle that type of complexity. So
yeah, but I don't want more complexity.
No, but okay, I think there we have to make the distinction that once it works, it is just fully automated. You don't see it.
It's the point from before. It's complex, but it does not necessarily need to be complex for the customer. The product behind the scenes is complex.
Yes.
Okay, clear. I drop in another question. Have we optimized industrial systems so aggressively for efficiency that we've accidentally designed out the optionality that flexibility actually needs?
Well, I think the first part of the question, so have we aggressively made industry, made processes, made machines more efficient? I think the answer is yes. And I think the answer is yes, and that's a good thing. I think past decades, industry reduced their energy consumption quite a lot. And not by reducing less, by producing less, but by just being more energy efficient. And that's a good thing, because industry today still runs for a big part on fossil fuels. So every efficiency measure, it's good. It's liters of oil saved, it's cubic meters of gas saved, and in the end, it's tons of CO2 saved. But then the second part of the question, did we then design out the optionality or the slack? I don't think so. I don't think on the energy efficiency that it counteracts the flexibility. It's not because you replace an old fossil gas boiler by a modern one, which is more efficient, or that you, close the steam valves and have less steam or compressed air leaks. It does not counteract flexibility. And I think you can go one step further if you would even increase efficiency even more in the future. And I think that's what electrification will do, because that's just by definition more efficient than burning fossil fuels. You will even create more options for flexibility. In the first level, by just complementing the fossil fuel assets with electrical ones. So the typical examples is gas boiler, electrical boiler, or put a heat pump next to it.
Yeah.
Then you have flexibility. We call it energy vector arbitrage. I want to use fossil fuels or electricity. And if you go one step further and you just fully electrify, you can just put buffers in place. You can put thermal buffers in place, and then you also create flexibility. So on that point, I don't think that efficiency necessarily eats up the potential or the options for the flexibility.
Yeah, generally, I would say that for flexibility, you have an advantage in, let's say, if the power is higher, because then you could go higher at certain moments when it's beneficial. And if you then would go for efficiency, you would not make machines bigger than what you really need. That might be
it is all true, and of course we would love seeing our industry again full at baseload, because in the end, global, it's better. And the reality today, it's not always the case. And then of course, at least you can limit the impact by the fact that then at least absolute efficiency, because we've done studies before, we published it also, the lower the load factor of the load factor of how close you are to the maximum capacity, the farther you away, the higher the savings from flexibility. So somehow, of course, it would be better if you would be running on base load, but if this is not the case, at least you can limit the impact. But if you take one step back, and if we go 10, 20 years further, we see what is happening today with Iran, and again, fossil fuels being constrained and a lot of stress immediately on the system, because we're still much fossil based. If you want to regain Europe our independence, it has to be also an energy independence. And the only really feasible options, okay, we can do a little things, and maybe we have to find other fossil fuels in Europe again. But the real change on the long run is we rely on solar and wind, and that means also they are in nature variable, and maybe in 20 or 30 years there is enough battery storage capacity that it becomes baseload again. But in the meantime, actually the companies that can run on low marginal cost renewable energy, they have also a competitive advantage. And I would say efficiency is always, we when we studied Frank together in the 90s, efficiency, of course, was number one, and still to some extent is true, but it is only true to the extent that it is a constrained resource in economic terms. And now what you have, like, there is more PV installed in almost every European country, but even in Belgium, which is not the most scenic country in the world, there is more capacity of PV installed than the peak demand of electricity. That means that during those moments, the assumption of a constrained resource is simply not true anymore. And in a way, it's actually energy you can actually waste. Okay. Maybe it's a bit controversial to say that, but at least...
well, it is wasted today. It's curtailed, so it's
and that wasted. Is wasted. Yeah. And so that means that and the economic optimum is not necessarily what you, from an energy perspective, would call efficient. It can be more economical to... Actually, an e-boiler. We also, 10 years ago, we said maybe we will be putting e-boilers. We were thermodynamic engineers saying, no, we will not use electricity to convert into heat. But why does it make sense? Also for the climate, also for the system. It is just because during certain moments in time, there's just there is just abundance of electricity. It's what we did in the 70s in Belgium. We lighted the highways. All highways were
but it will always be limited in time, Because
of course,
the sun is limited in time in Belgium.
No, but and that is exactly the case. So it will never become. Maybe in the future, if there's a lot of storage in the system, which becomes so cheap that we can just throw batteries at everything, then maybe at some point we can again go to a next narrative. But for the next 10, 20 years, we will need flexibility, and also industries that can operate here and have a competitive edge and can thrive. They will have to, somehow be able to function on the rhythm of the sun and the wind. And then, in essence, it's a little bit where we have to go to. And I know there are exceptions. I know that a refinery is not something that you can easily ramp up or down. So that is all true. But there are a lot of processes. Right?
Well, you say so, but maybe a controversial thing, but you could do it. But then it's again outweighing, is it efficient? Yes or no? It's maybe not efficient use of the refinery, of the capex. But it could be run on renewable energy for, I don't know, a few sunny seasons, spring, summer, and then produce less during autumn and winter, and you just have large buffers of your refined products.
Yes.
But that also links maybe to the efficiency question. But it's then more like lean manufacturing, the just-in-time principle.
Okay. Getting far from
we can go on.
But we are limited in time as well, not only renewable energy, but also in time. So we are getting to the end of the podcast. Just as a conclusion, maybe for each of us, that we give a personal topic that we think might be a little bit uncomfortable in this evolution of flexibility.
Well,
Let's start.
I can start, yes. Sometimes I'm a little bit surprised, frustrated. Why is it not happening? So you see sometimes customers say, well, you should do it. It is in your interest to act, and it is not happening. And why is that? Because the savings are there. It works. We have by now sufficient references and other companies also that we can show it, that the savings are there, that the products work. And why is it not happening? And I think it is because people are still a bit stuck in the old paradigm where it's difficult to accept that you don't want to run a production plant flexibly. And I hope and I think it needs a bit of time to accept that, but that is, my uncomfortable truth. I still think too many people are stuck in the old paradigm and are reluctant to move towards what actually will be the dominant narrative for the next 10 to 20 years.
Yeah. Well, mine uncomfortable truth, and maybe it's a bold statement, but I think maybe fossil fuels are too cheap. And I think that's a risky thing to say, especially with the Iranian war going on. But it's just that compared to the renewable alternative, you could say that it's still too cheap, and not the energy itself per se, but just how it is taxed, how it is distributed and made available to the industry. If you put today a heat pump in Belgium, it's still very expensive to operate because the electricity price, and not just the market price, but overall, it's like 2, 3, 4 times as expensive as fossil gas.
Yeah, so 2 times would be, I would say, acceptable. This is what the
2 times
market
is for
values.
Really big industry.
Yeah, but that would be acceptable.
Yeah.
But currently, if in households, it's like maybe 5 times or even more. And that, of course, kills it. And that is not because the markets are like this. This is because the system that we politically decided to implement and to tax the way we tax stuff and the way we distribute costs for systems towards civilians, taxpayers, companies is just not fit for purpose.
Yeah, exactly. So the fossil fuels being too cheap, you could also phrase it as the electricity is
comparably
too expensive because of all the taxes and all the stuff.
Yeah, I agree with that.
Right.
Yes.
For me, it's about, maybe in line what you said, Jeroen, I think that people in the companies are reluctant to change, and that they want predictability of the process, stability, and not changing the way they're doing stuff. But they value that more than the value of flexibility. And that might be a reason why it's not happening.
Yes, I agree, I would say. But then what is it perceived as stability? Because if things are bumpy, then maybe you have to be agile. But I agree, a lot of people, you can want the system of 10, 20 years ago, but it's not because you're nostalgic that it will happen.
But it's a bit like now with the blockage of the Strait of Hormuz, the oil prices are going up, and maybe for sure electricity prices follow, not always, but at moments with not a lot of renewable energy. Those prices go up, and people start to make crisis plans on what can our industry do with this kind of shock coming on.
Yeah.
And it's a bit like if you can integrate this way of thinking into the daily business, that you always have this kind of flexible way of, all right, when it's more expensive, we do more this, and when it's less expensive, we do that. We have an automatic system. So if you get the mindset of now, where you think it's immediate, it's urgent, if you can translate that into an organizational way of working, then I think the organization as a whole will benefit because they will become more profitable.
So now we have had the third shock in a few years. So first lockdown, the second one was then the gas crisis, and now the third one is with what's happened in Iran and the consequences of it. So maybe after the third time, everybody will not revert back to business as usual when it is gone. Let's hope so, because I think it has to be.
Yeah, okay. We're not hoping for more shocks.
No. This should be enough now. I think we should have. This is enough. So let's just change for the better now.
Yeah.
All right. Nice conclusion, guys. Okay. Thank you very much.
Thank you.